Well, it seems to be surviving right now. I mean, the stock hit a low point in December of 2013. It traded, I think, below $6, and it's rallied back quite nicely. It's traded above $11 as recently as yesterday. So I think it can survive. It's got a lot of support. Don't forget, I do the same thing, but we tend to look at our own little world, and all we see are iPhones and Android devices. But BlackBerry is a global enterprise. It still has a lot of services and businesses, both on the phone side as well as the enterprise software side for governments around the globe, because they're still the preeminent player when it comes to data security across those networks. So that's really what's kept them in the survival mode right now. But it'll be interesting. John Chen, the CEO who took over and has been restructuring the company for a long time, he's got a lot of things coming out now. So it's actually, if I were a BlackBerry employee and still breathing as a BlackBerry employee, I think it'd be exciting times for them right now. Two big acquisitions, MoVirtue and SecuSmart. MoVirtue is a very interesting company. I think this plays in the strategy of trying to win back the retail customer. MoVirtue creates SIM cards that allow you to split the telephony as well as the data between personal use and company use. So I think the strategy there is implementing MoVirtue's technology inside of the Passport phones and future phones. They're coming out with a classic phone, the BlackBerry Classic phone at the end of the year, will allow employees of companies that are forced to use BlackBerry services and BlackBerry hardware to now just carry one phone. So I think what he's trying to do is prize away the Android users and the iPhone users by saying, here's a phone that you can use for everything, and we can split the services so we can track the services both ways. SecuSmart then is another company that has security across the enterprise-wide system, mostly for governments, but also companies. So it's further, it's also, I agree with John Chen, it's actually smart. They're trying to increase market share and raise that barrier to entry into that side of their business even further. That's the one side of the business that they've really done well to protect. Now they need to protect it even further. So I think he's probably ceded control of the retail market to Apple and Samsung and some of the other Android smartphone suppliers, because that market is so ingrained into people right now. It's hard. It's almost like changing your checking account at a bank. It's hard to move off of iOS or off of Android onto another platform. You really have to want to do it. So I think he ceded that market to people. Acquisitions in the future will probably be more down along the line of that enterprise capacity that they do for governments and businesses, and I think they're really going to try and lock in that market. They're basically starting over again, because that's what they made their money to begin with, and then they'll hopefully try to come back into the retail market later. Again, they're at the forefront of telephony and data security when it comes to their services on the enterprise level, especially around governments. Governments in the Middle East, governments in Asia. They've built some big barriers to entry there. You know, there's been past circumstances where governments have actually asked them to do things that other securities providers would not do, and they've done it. So they're probably going to have those as long-standing clients. So again, I think they've got some nice barriers there, and they'll probably be adding acquisitions to sustain that front as well as keep it higher. I think that's what you'll see from them after the Passport launch, after we get an earnings announcement on Friday. The best time if you had the guts was December of 2013, obviously, but you know, it's one of those things you almost want to take a shot at it. Remember, BlackBerry's got a couple of things going for it which also bodes well for its survival. It's an iconic Canadian brand. And when it was going through who was going to take it over, who was going to support it, that was one of the things that you kept hearing coming out of Canada, is that there were several wealthy Canadians that were not going to let that brand die. They just were not going to do it, and the Canadian government is the same way. It's also a big job creator. And a big employer inside of the Canadian market. So that has it's going for it. I almost think that you could take a shot on the stock right now, and let's see what happens. I don't think you're going to lose any more money trading at $10 or $11 a share. Your downside risk is pretty limited. It does have some breakup value, and it does have some patent value. I mean, it does have some brand value. So, yeah, I mean, I would wait and see what the financials look like on Friday. But John Chen is singing the right tune, and you know, if he's good to his word, the company will turn around in a year.